Courtiers Head of Asset Management and Fund Manager James Timpson's here to talk us through what happened in markets in October in a hopefully positive note before he gets on his feet in December at the client seminars. James, welcome. Last time of the year. Take us through the markets.
Thanks, Leo. So once again, it's been another positive month for global stock markets. The MSCI World Index, which tracks global developed equities, went up another 2.5% during the month. And this is despite a bit of a spike in volatility that we saw earlier on in the month.
What caused that?
Yes, this happened around mid-month when investors started to get worried again about the trade tensions between the US and China. And the S&P 500 index actually had its worst day since all the fallout from Liberation Day back in April. Since then, things have started to look more positive again. Donald Trump actually met up with President Xi Jinping of China last week.
That settled markets?
Yeah, so it sounds as though they had some really constructive talks. No formal deal was made, but they did still make some positive announcements. And so overall markets were still positive last month.
How did this work and affect the Courtiers funds, if at all?
So the Courtiers funds do have a lot of exposure to the global stock market. So every time there's positive sentiment in the market, it's generally good for the Courtiers funds.
Bring us closer to home. What's been happening in the UK?
Yeah, so here in the UK, we had our usual monthly inflation print. And even though it came in at the same overall level that it has been for the last couple of months, 3.8%, this time this was actually lower than was forecast by analysts, in particular food prices, which actually fell in price for the first time in over a year.
Does that mean you and the investment team enjoyed some celebratory pizza?
We actually did, yeah. There's a Domino's just around the corner, which does some very good lunchtime deals.
We're not endorsed by them, though, are we?
No, this is not a paid promotion. But yeah, so because this inflation data came in softer than expected, this was generally good news for assets, in particular those which are sensitive to interest rates, because it's fueled speculation that there could be more rate cuts in the near future. So things such as gilts reacted really well. They've actually just had their best month since December 2023. And it was also a good month for the UK stock market. So the FTSE 100 index, which has had a really good year this year, that's increased another 4%. So it was a good month in general for both UK stocks and UK bonds.
And value's been doing relatively well. Growth has been outperforming through the course of the year, hasn't it? I don't want to digress too much. Gary's got a piece coming out on value versus growth and touches on the returns that we've seen in the growth fund, which is value biased.
Yes, it's quite a confusing quirk, that. But although growth stocks have still been outperforming value stocks for the last 3 years or so, it's been generally positive all round. So as long as you're invested in equities, you've done really well this year.
Thanks, James. So just moving forward, what time we do have left in the year, have you got any expectations of what you might see before you're on your feet at the seminars, or are there any interesting stocks we always like to ask that you've been looking at?
I suppose the big thing to watch out for between now and the seminar is the budget coming up at the end of November.
Of course.
And as usual, we'll be keeping an eye on that.
Absolutely.
And I'm sure we'll put something out after it's announced.
Already in the diary.
Yeah.
James, thanks very much. Thanks again for your time throughout 2025. Look forward to seeing you at the seminars.
Thanks, Leo.
All the best. If you have any questions, please do speak to your advisor or contact us through the website. Thanks for watching.